The Calgary real estate market is technically correcting. So congratulations to all of you keyboard warriors who saw this coming over a year ago and who has been commenting on my channel for the past 3 years saying that Calgary was going to correct itself. Now, yeah, I didn't see tariffs. I didn't see a federal election going a liberal direction, but I did see the Alberta economy holding fairly strong and resilient during this time. Now, of course, unemployment rate is higher than what we would like to see it, but at the end of the day, we're still doing quite well, and we are actually resisting some tariff pressure better than other provinces. So, are we technically correcting? Not yet. A correction in the real estate market is 5 to 10%. A crash is 20% and more. So when we look at this chart here, the closest thing to a correction, and technically a correction, is the apartment prices in Calgary. And at the end of the day, it's one of the worst investments that you could make in this city because the apartment complexes in Calgary are always going up and falling even more. So let's dive into the data and figure out what is going on in the Calgary real estate market because it is not the same in the entire city. My name is Fyfe, your Calgary Realtor. Now, if you're looking at getting additional information, a lot of this stuff is free. If you want the PDF report, I have the edited version of this PDF report for you to browse in my Google Drive folder. If you want more additional information as to what is happening in this city, go ahead and let me know because I have access to all sorts of data throughout the city. Book a Zoom call, let's have a conversation and figure out how you can best position yourself for success in this market. You want to know what your home is valued at? That's a very interesting one. There's a link in the description, instant home evaluation tool. Me or my partner Christian will reach out, we'll say hi, we'll ask how you're doing and see if there's anything we can do to help you out along this journey. Or if you're just curious, you want to know what your home is valued at, maybe you want to pull some equity, that's cool too. But let's dive into the data and figure out what's going on in this beautiful city. So sales, we're down 11.6%, right? Last year we were at 2,200, 2,300, now we're at 2,100. So that's about a $200 sales difference. So we've slowed down there. Now you can see month over month, we've actually are down 4.9%. So we have seen a slight increase in activity compared to last month, which is a good sign for sales in total. New listings were up. So we are at almost 4,000 new listings for the month of July. Last year we were at 3,600, so that's a plus of 300 new listings compared to this time last year, and we're down in sales. So clearly you're seeing a divergence there. Now we are, from last month, we were at 42 listings, and now we are down to 39 listings, again softening a little bit. So an increase in sales from last month, a decrease of new listings, which is a good sign in a sense of finding more balanced conditions. It's not aggressively getting worse. Inventory, right, 66% up compared to last year. Last year we only had 4,200 listings. This year we have 6,900 listings left over. We're down 17% from last year or last month again. So again, we're starting to see a little bit of a better movement in this market compared to last month. Months of supply up 90% compared to last year. We were at 1.75, very strong seller's market. Now we're at 3.3 months of supply, meaning that it's a balanced market. It's a balanced market out there. You shouldn't see too much fluctuation in price point in a balanced market, right? So last month we were at over 100%. Now we're down to 90%, so we're down 34%. So a lot of these major indicators are actually showing that the market's actually getting a little bit better compared to what it was last month. But again, we have to remember that this is total residential, okay? This is all property types. We don't like to live in the all property type category. So let's read what the Calgary Real Estate Board has written about this market and figure out what's going on. So supplies growth weighs on home prices, thanks to gains mostly occurring in the new communities, Inventory levels in July were around 7,000 units, reaching levels not seen prior to the pandemic and higher than long-term trends. While supply has improved across all property types and all districts, the largest gains occurred in the areas where there has been new community growth. I have had multiple transactions now in new communities with this new rebate program that's being proposed by the federal government. It's making it very difficult for the resale market to keep up because builders are having a lot of supply, and new buyers are looking forward to that new rebate program, right? I believe it's still in session. It hasn't been voted on yet, but there are people that are waiting to see what is happening there, because that's a huge savings. That's like a $50,000 in some circumstances savings for that rebate program. The additional supply has weighed on home prices in some parts of the city. The total residential benchmark price in Calgary has trended down over the past several months and is currently 4% below last year's peak reported in June 2024. Peak June 2024. Price declines are not occurring across all property types in all locations of the city, and even where there has been declines, it has not erased all the gains made over the past several years. The steepest price declines have occurred for apartments and row-style homes, mostly in the Northeast and North District, which coincides with significant gains in new supply. So again, Calgary is seeing some correction, but we're not seeing correction over the entire city, so relax, okay? We're not seeing all of this crash all over the city. The sky is not falling out. The rise in supplies occurred as sales continue to slow and new listings improve in July. There were 2,100 sales, a 12% decline over last year, while new listings reached 3,900 units. And over 8% increase over last year. In addition to the persistent economic uncertainty due to tariffs, sales and new listings were impacted by no further reductions in lending rates and added competition from the new home market. Apartment-style homes are reported the highest months of supply with over 4 months, while both detached and semi-detached homes are seeing conditions remain relatively balanced at 3 months of supply. So let's relax, okay? Let's not freak out. The market's not falling apart here. Calgary's still holding up. But yeah, we're seeing some slowdown compared to the craziness that we've seen over the last 2 years, right? So let's start to figure out what's going on here. So total residential, right? All property types morphed into one number. We are down 4%, right? We're down $2,400 from last year and $3,300 from the year before. Now, if we actually go here, and I don't have it opened up yet, but if we go to the benchmark attributes, we can see exactly what that is. So when you go to the City of Calgary Composite, we have attributes, right? It's a home that was built in 2000. It's a 3-bed, 3-bath, double attached garage, yada, yada, yada. So when you start to look at this number, you want to make sure that you're putting the attributes into it just to make sure that you have a general understanding of what it actually is, okay? Look at this beautiful chart, right? We're seeing a slowdown, okay? The sky is not falling. It's crazy to me how many people comment on these videos thinking that everything is falling apart. I feel bad for the investors. A lot of the uneducated investors who came to Calgary pushed up our prices, bought homes thinking that it's going to increase forever, especially in the new construction segment in 2022 and 2023. Some of them made a lot of money. I've witnessed people buy new construction homes in 2020, 2021, sold in 2023, 2024. They did well. Then you see the people that came into the market late 2022, 2023, 2024, and now they're stuck, right? Why would you ever buy a piece of real estate thinking that it's going to go up in value in 5 years? It just doesn't make sense to me. Real estate is a long-term game. You want to make sure that when you buy a piece of real estate, it's at bare minimum 5 years, one mortgage term at least. You want to buy a piece of real estate for 20 plus years and allow it to grow over the long term. Okay, look at the inventory difference, 4,000 units over almost 7,000 units, right? We've been fairly consistent with that. You can see the pricing has somewhat declined at a rapid pace. But again, if you look at last year, this is very common for Calgary, right? We have our peaks in April, May, June. July, August, September, we see a slowdown. In September, you see a little bit of a kick up. October, you start to see a small kick up, but then it just drops down again. So this is actually a very cyclical cycle. I'm not very surprised as to why this is going on. We had our little peak. We had our little increase, but then we had the federal election. We had tariffs. We had a lot of things uncertain in this market. So it's just not surprising to me that we're seeing a slowdown going in the Calgary real estate market. So let's break this down, right? Let's figure out what is actually going on. So one of the things I want to highlight is days on market. Days on market is as slow as what it was in November of last year. That's pretty cool. You can see that the market is absolutely slowed down. Look at this, 20, 20, 19, 20. Like that is some wild market activity for the entire city. That's not even one property type. That's all property types morphed into one stat. And then you look at the benchmark price. What's like, well, yeah, it was the attributes were 606 last year. Now it's 682. But then you look at the median and the average price. Well, you can see that we've actually increased from last year. So the average price in the city has actually gone over 616, where last year was 606, meaning that a lot of the losses, right, are being pulled down from the lower price points like we just read, like the apartment styles and the row townhouses. So if you have a semi-detached and you have a single family home, you're doing fine. But if you have an apartment style product or an apartment style product, those are going to see the biggest slowing down and correction compared to the other property types. So again, break your numbers down, right? This is a pretty wild one. So you can see we were at 10% Q4, Q1, 2022, 2024. Then now we're at the 0%, right? You can see the months of supply again. You can see, I've brought this up a couple of times. We were fairly steady for a while. Now we've seemed to break free, and we're starting to see higher amounts of months of supply, again indicating that the market's slowing down, indicating that we actually might stay in this negative kind of territory for a little while, okay? Yes, my tone has changed. Congratulations for those of you who watch these videos, because I still believe in Calgary. I still believe we're resilient. I didn't know that we were going to get smacked with tariffs. I didn't know that we were going to have a federal election and a liberal government. I thought there was going to be opposite things that happened. So sorry. Now, when we look at the city of Calgary total sales, you can see, again, we've just had a steady decline. Year over year, we're still almost at 15,000 units. You can see that the single-family homes still dominate the amount of sales. And then if you actually look at the apartments, you can see just the decline just from this green bar of how little apartment sales we've had compared to previous years. And that's just looking at colors. So when you look at the actual price range, you can see that the 600,000, the 700,000, and the 800,000 are still relatively close to levels that we saw before. But then you look at the sub 300s, look at the gap between the 300s themselves, the 400s, the 500s are doing well. So this is all property types, right? All property types. But you can see that 6, 7, 8, 9s, a million plus is actually seeing more than what we saw last year. So those upper end markets, they're doing fine, right? Yes, of course, we're seeing some inventory increases, but they're doing fine. $600,000 price range in general is doing the most amount of activity, followed by the $500,000 price range, right? So that's interesting. You look at the inventory, look at this big increase in inventory, right? You're seeing a huge amount of inventory left on the market at the end of the month, right? People see this, oh, that's 2021. But then you got to break it down. Well, where is all the inventory, right? Well, a lot of the inventory is the apartment market, right? You add everything under, let's just add everything under 500,000. That's quite a bit of inventory, right? 600, 700, 800,000. Yes, of course, there's still 800 units left over at the end of the month, but a big chunk of it is pulling or increasing because of these lower price point homes, right? So this is, again, where it's like, you can't just look at the numbers. We got to actually look at the data, right? So we go in here, we go sub 400, we go back, let's just go back 60 days, right? And the entire Calgary market, you see there's 3,000 units, right? We go active right now, live on market, 1,700, pending. You can see that there's only 170, so 10%. And then you go sold in 60 days, and there's 1,100. So there's still some activity there over the last 2 months, but the last month has really seen a shift, and there's only 575, right? So 600 units out of the actual 2,500 units are sold, right? So you really want to start to break these things down and understand what the heck is going on, because you can't blanket statement this stuff. So when we start to look at the new listings, yes, we're starting to see an increase. Calgary has grown at a rapid rate. I have shown slides before from ChatGPT showing how many new construction homes are being built. This new rezoning incentive, horrible timing in my personal opinion, in a way. Yes, we're seeing a huge correction in price point, which was what the city wants. Densification is what the city wants. I say horrible timing because I'm a little bitter about it, because there's a lot of beautiful homes that are being ripped down, and there's just a lot of densification in the city. Lack of parking is frustrating for those of you who've been around here for long enough, and now your communities are changing at a rapid rate. So it's quite frustrating. Make sure that you go out and vote this fall for a municipal councillor that you actually believe is going to make a difference, and don't just ignore it. Do your service and vote. Anyways, so new listings have increased. We're going to see that increase, especially when September, October rolls around, when that new rezoning kicked in and a lot of the new construction homes started. A lot of them are going to be finished in September, October. So you think inventory is crazy now? Wait till you see what happens in Q4, Q1. It's going to be cool. So again, talking about that months of supply, right? We kind of broke free now. We're seeing some increases again, talking about that rezoning. Come on. It's going to be an interesting one. So months of supply. So let's actually look at what is going on in the city. This is a really good breakdown as to what is happening throughout the entire city. I promise I am going to actually record all property types this month. I've been going through a lot of stuff personally in the last little while, but I am back and I am willing to record content, and I'm very excited to get to that. So let's look at detached market, right? South, east, west, northwest. 2 months of supply, seller's market. If you're in the detached market in those quadrants, just be cautious, right? Look at the data. Go to detached. Go to Northwest as an example and figure out what's going on in that market and how aggressive you need to be for this price point, right? If we just look at the data super quickly and we just look at close date as an example, we go down here, we just look at whatever's recently sold in the last little while, okay? Yes, of course, we're still seeing, if I go like this, if I go and I click on this and we look here, the sold price, the asking to sold price is still under 100%, right? But when you're looking at the actual days on market, in some instances, right, they're under 2 weeks. Actually, in quite a few instances, they're under 2 weeks. That tells me that they're going pending within that first week. So if you are in this specific market, you just want to make sure that you're actually making the moves and preparing yourself properly. If you look at the apartment market, as an example, in the exact same quadrants of south and west and northeast, you have a lot of options, a lot of patience, a lot of time to figure out what is that best opportunity for you. Hopefully you're not an investor looking for an investment property at this moment, at least. I think that we still have a ride down for apartments. Hold off. If you're an investor, put your money away, save it up, find some other apartments in the future. But at the end of the day, if you're like a residential or like a first-time home buyer and you want to get in the market and you're ready, your lease is up, just take your time. Take your time. Semi-detached, again, look at south here. Under 2 months of supply, still clearly a seller's market. Townhouses, again, northwest, seller's market. But anything above that 3 months of supply, right, if you're looking at these markets here, that's balanced market conditions, right? Yes, of course, we're seeing some shifts and some slowing down. We're still probably going to see some correction going on in these areas, but it's not going to be as aggressive as if it was over 5 months, something along those lines, like apartments in northwest, east, Calgary. These are going to see the biggest declines. 7 months. I haven't seen that in ages. So these are fun to watch. These are interesting things to know. So let's look at and break it down. Okay, total residential, already chatted about. Single family homes, right? Yes, of course, we're seeing a decline. $2,500 in the last month, $6,000 in the last year. That's a flat line. That's nothing. That's just average market movement, right? 1% on a home sale is not much, right? We even see sales to list ratios at like 97, 98%, right? This is 1%, right? Nothing. Single or semi-detached is still seeing increases. We're up $9,600 on average from last year, right? Well, what does that get you? Well, if we look at this, we go to semi-detached, we go to compound or composite, right? This is what you get for this is that benchmark attributes for the semi-detached, right? And you look at row townhouses down 18,000 from last year, apartments down 16,000 from last year, apartments down 5%. That's a correction. I would call that a correction. So let's just break it down, right? Let's figure out how this is going to affect your personal situation. So go ahead, pause the video, read what the Calgary Real Estate Board has written about these individual property types, because it is very fascinating. It's very different across the city. Don't just blanket statement this, please. And go ahead and actually figure that out. Now, this is cool, right? You start to look at the total residential price points. These are the all property types morphed into one. So you got north, 6% down, northeast, 7. East, surprisingly, is down 7.4, the most affordable quadrant in the entire city. Still seeing some growth on the outskirts of the ring road. You've got your Belvedere out there. You've got really nice apartments and really nice townhouses being built, but they're still down 7.4%. South is being very resilient. West, resilient. Northeast, resilient, right? Yes, of course we're down, but we're not down nearly as much as other areas. So check this out. So year-over-year price growth, right? You're looking at this just general number as to what has seen losses compared to what has seen gains. The only gains in this market are city center, northwest and west in the semi-detached market, where everything else is seeing some sort of correction, and anything below this line here, I would say, is a proper correction, right? A proper technical correction in the real estate market. Cool? So you want to know what your home is at? It's gone up, it's gone down, it's gone left, it's gone right. You can let me know, you can put your information into here. We're going to call. Hey, what's going on? How can we help, right? We're just here to provide a service, provide a value. We're more than happy to jump on an MLS kind of browse with you. Maybe you've got a couple of neighbors that you're interested in. You've got a couple properties that you want to keep your eye out on. Maybe you're looking to refinance. Maybe you're looking to do a renovation and pull some equity out, right? Let us help you. We have a really good set of contacts. If I go Calgary, this list is always changing, always growing. We have all sorts of contacts here for different industries and different people that provide services that can help you along the journey. We're not just here to buy and sell and help you buy and sell. We're here to actually help you grow your asset and portfolio to be the best it possibly can be, right? So scan the QR code. This will take you to that AI home evaluation tool, or you can go and click it in the link. It's pretty slick. Again, myself or Christian will give you a ring, text, hey, what's up? How's it going? So let's break this down because this is fascinating. So this is the breakdown of each individual property type in their respective quadrants. You can see that for the detached market, it's holding up quite well. Yes, of course, we're still seeing declines, right? But they're small. They're nothing significant. Yeah, of course, you get some 7,000s, right? Some 4,000s, some 3,000s, right? Yes, of course, you're seeing some slowdowns, but it's not doing as bad as other areas. The months of supply are still relatively healthy, right? The biggest slowdown would probably be the Northeast, like it is in every other property type, 42% sales to listing ratio. So out of the 290 new listings, only 122 sales, right? Apartments, totally different story, right? You can see that we see decreases across the board, right? A $6,000 decrease is quite significant for an apartment that's $290,000 versus a $7,000 decrease at a home that's worth $700,000. So let's just make sure to keep that in perspective, right? You're starting to see quite an aggressive slowdown across the entire board. The average for apartments is 4 months, where the average is 3 months for a single family. So give us a pause, look at your quadrant. This is semi-detached in row, same thing. Semi-detached, I've brought it up multiple times. You can see some increases there. Row apartments, kind of surprised, to be honest. They went through a pretty aggressive run up. I thought that they were going to hold up well, but I think with this rezoning law and this rezoning thing, I think that there's a lot of people slowing down, and there is quite a bit of more inventory coming to the townhouse market. I truthfully, honestly, didn't really see the townhouse market slowing down as aggressively as it has. I thought that they were going to be fairly resilient because it's still fairly affordable, right? Fairly affordable. Don't chew me apart on the comments. It's fairly affordable. Yes, of course, Calgary went through the craziness. Edmonton is still at an affordable price point. I mean, if you're looking at Edmonton, reach out. We got some people up in Edmonton that can help you. But regardless, it is surprising to me that it slowed down as fast as it has. So, yes, my tone has changed. Congratulations for all of you who are out there commenting on all my videos, loving it. We're in the negatives, right? We're going to stay probably in this negative benchmark year-over-year price for a while. I would imagine we're probably going to be down here for like the next 8 to 10 months. We're probably going to see some slowdowns. Is it going to be aggressive and is it going to be fast? No, I hope not. I mean, we don't want the real estate market to completely crash, right? We don't want it to completely burn up and fall apart. Yes, I know people want to see that so they can buy properties because it's more realistic, but then you're screwing over families, right? Like you're screwing over families. Yes, some people are uneducated and they didn't really get the best advice, or, at the time they wanted to make the moves. But again, when you buy real estate, 5-10 years, right? These little corrections over this 1 to 2 year blip shouldn't really be a huge deal, because you shouldn't be watching the real estate market as aggressively if you're a homeowner and you are just trying to keep tabs, right? Because it's a long-term game, right? So, look at this, right? We're starting to see it down. We have had a consistent 5-year growth. So the fact that we're slowing down is nothing surprising. Like, come on. We had a pretty wild roller coaster 2022. I remember this. I remember this vividly. That was gnarly. But then it happened again in 2023. It happened again in 2024. And in 2025, it was going. And then we crashed. So, my name's Adam Fyfe, your Calgary real estate agent. If you have any questions and you want to understand what's going on in this market, book the call, right? I'm easy to talk to. We can just jump on for 30 minutes to an hour. We can have a general conversation about your plans. You might be a year away. You might be 2 months away, whatever. Let's go in. Let's use this data to our advantage. Let's make sure you have a general understanding, and let's make sure that you're set up as best as you possibly can be to make the decisions that you need to make for your family. So, we'll see you on the next one. Peace.